Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it. Hey everybody, Nick Petrozello here. Thank you for coming to see this video. I wanted to take a moment to share with you a trading method. If you want to learn to trade, this video can show anyone how to trade markets. And the concept we want to focus on today is structure. Now I am going to give you a little bit of an Easter egg after I teach structure that's going to make this even more effective. And it might be tailored towards maybe a little more of a knowledgeable trader, but I'm going to teach it in a way that anybody can understand. Very, very simple. So first, let's talk about trend. In order to take advantage of structure, we usually have to understand what a trend is. So if you look at the screen here, you're going to see me build a hypothetical trend, right? So price is going to head up, it's going to pull back, it's going to make a higher low, higher high, higher low, and higher high. So as price is heading up, pulling back and making these higher highs and higher lows, that is an uptrend. So a series of higher highs and higher lows, that's an uptrend. So we can use this information, the fact that price is in a trend, to predict where it's going to go next. It's probably going to go up. It's in an uptrend. Now, what can we do to make money with this? We're going to go ahead and use an example here on the screen. Now I'm going to take advantage of the TradingView replay function, and it's a great function where I've taken price back through time, and I can hit the play button and we can see price develop as if, we're back in time. So we can go through this example really quickly, not have to wait 5 days, right? So I want to wait for price to turn into an uptrend. If you look now, it's in a downtrend. You have lower highs and lower lows. So what I need to see this downtrend broken is for this high right here, this lower high, I need price to go above that. It may take a while, but eventually when it goes above that, we're going to be almost in an uptrend. So let's see what price does as I hit the play button. Okay, price is heading up, and it is heading up, and there it is. We have a break of the downtrend. Now it hasn't created an uptrend yet. What I need to see here is price make a higher low. So let's get rid of this drawing, and we're going to extrapolate. I'm going to draw a picture of what that might look like. So you have a high, you have a low, you have a higher high. Now if price pulled back right here and then it didn't go below here, it stayed above that line and it kept going up, then that's an uptrend. Once you've made that higher low right here, now it could be here, it could be here, it could be here, it could be anywhere, but as long as it's above that spot right there, then you're in an uptrend. So let's see what price does, because it looks like it's about to become an uptrend, but I need price to make a higher low above that low right there. So here we go. Okay, is price going to pull back? Let's see. Still going up, still going up, still go. Okay, there's a pullback right there. Now price is pulled back and it's made a low right here. Now pretty quickly it popped up. So I'm going to go back a little bit and we're going to pretend that we didn't see it pop up, because under any circumstance it made a low. Now at this time we don't know if it's going to go down any further or anything like that, but once we hit play we're going to see that price starts to head back up. So it looks like we got ourselves a higher low right here. Now what can we do to make money with this, right? How can we make money off of this? Well, let's just say we have some tools that tell us the price is going to continue up right here. Now we're not going to teach those tools right now. I'm going to teach some a little bit later in this video. I'm going to give you a very simple tool for that later in this video. But let's say that we have a tool that told us price is going to go up right here. So what we can do is we can enter a long trade right here. Now where do we want to get out of this trade, right? We're going to bet on the price going up, but how long do we want to stay in this trade? Well, first of all, we have to take a look at where price might turn back down. What I mean by that is if price is heading up making us money and we don't get out of this trade while we're in profit and it comes back down, then we've lost money, right? The bottom of this box right here, this area right there, the bottom of this red is called the stop loss. That means if price goes below that, we've lost money, we're out of the trade. Now, let's just pretend for a moment that I determine that I will exit in profit up here at the top of this green box. If price goes above that, that's my take profit and I've made the money. So we want to make sure that we stay in the trade while it's going up and we exit the trade before it flips back around and starts to head down and starts to take away our profit and might even cause us to lose money. How do we do that? We're going to use structure. So structure can be found if you look left. What does that mean? Well, we saw this downtrend before. Price was making lower highs and lower lows. Well, those pivots where those highs are, those are structure. Anytime price pivots like that, it's coming up here and then it starts to head down there. Those pivots are structure, and price tends to flip around at those. It tends to turn around and make a U-turn right there. So in this case, if I were to enter this trade and I didn't have a plan yet and I wanted price to go up, right? I was planning on price heading up in this trend. I would probably exit before price comes to this structure right here, because there's a really good chance that as price goes up, it's going to want want to turn around at that structure and then head back down, and I'm going to start to lose money, right? So I want to maximize my profit. So if that's the case, then I'm going to exit before this blue line. I'm going to enter right here. That's what my tools said to enter. I'm going to set a stop loss. There's ways to do that. We're not going to talk about that method right now. And then I'm going to have a take profit up here. But I'm going to take my profit out before this blue line. Now, in this case, we're not going to get too deep into this, but because of the way that this is, this 1.43 risk to reward ratio, I explained this at Algo Factory. I can explain this in a different video. Feel free to send us an email if you want to know more about risk to reward ratio, and you send me an email, I might just make you a video and send it to you. These are things that people want to know. But in the meantime, that 1.43 means that if I put in $100 to this trade, then it's going to make me $143 if I win the trade, and it's going to lose me $100 if I lose the trade. So if price goes down here, I'm going to lose $100. If price goes up here to the top of the green box and I exit the trade, it's going to make me $143. And that's what you want. You want to have a chance at winning more than you lose, okay? Okay, so let's go ahead and simulate this trade. I'm going to put a line right here. That's where I'm going to exit right at the top of that green box. And we're going to hit the play button and see what happens to the price. Is price going to dip out of here and go against me? I'm going to lose $100, or is it going to go up and make its way to the top and make me $143? Well, let's see what it does. All right, price. Oh, there, I was fast. Wow. So price went straight to the target. It didn't take any time. It went all the way up. And what it did was it even went past that structure, but you can see that it did turn around at that structure. So I won my trade. That's great. I'm going to get rid of some of these lines, but you'll notice that right here, just above that structure from back here, you'll notice the price flipped around pretty hard, but it did pierce that structure, showing how bullish things are. And what that means is there's a really good chance price is going to continue back up here, right? So let's go ahead and see what happens and see if we can even get another trade in play. And I'm going to go ahead and add some more structure points for us to watch here. Okay, so we're going to look for price bouncing here. Now, it does look like it's going to continue up here. So let's just say I have some more advanced tools and I have an indication the price is going to head up. I'm going to go ahead and enter a trade here long, and I'm going to take my profit prior to this structure right here. Okay, so let's see. This is a 1.92 to 1 risk to reward ratio. If price heads down, I lose $100. If price goes all the way up past here, I want to make $192. That's almost a 2 to 1. That's a really nice ratio. Let's see what happens when we push play. There we go. Price is heading up and almost won that trade. Almost won. Look at that. So this is something to learn right here. I didn't quite win the trade. You'll notice that it went right to the edge of my green box, but it didn't quite make it there. Why? Because this structure up here, because the top of that line right there from this old pivot point caused price to repel and head back down. So I probably should have made my take profit a little bit lower, but in this case I didn't, and I did not win that trade, at least not yet. Okay, so let's just hit play, see what happens. Oh, not looking good. Oh, wait a minute, there it is. Okay, so I won the trade. Eventually it got out, so I lucked out and price headed up, and what it really did, if you take a look here, was it continued making a trend upwards, right? So we're in a pretty well-defined uptrend here. Price is making higher highs, higher lows, right? And then you have this kind of this lower low almost, right? But you could call this a complex pullback, really, because price ended up making a higher high. And in reality, looking back, what you really saw was price just making that low, just having a complex move. So really, you're still in an uptrend. Price is still heading up. So let's see if we can identify when this uptrend ends, and we're going to show you a way to add a new tool to things, right? Now let's rewind a little bit and show you another way the structure can be used. Let's just say you are looking for a place to enter the trade. Price is heading up, and you're going to look for structure that might tell you when it's okay to enter a trade. Well, what do we have? Let's go back in time. Let's pretend we didn't see any of this, and let's go right here. Price is clearly in an uptrend. Well, what does the uptrend look like? You have this move up here, pullback, higher high, higher low. Well, you have some structure right here, don't you? You have this pullback that made a pivot right there. So what can we do with that? Well, we can use that as structure. So if you put a line right there at the bottom, if price decides to head back down and you're in an uptrend already, then there's a really good chance it could bounce right at that structure and continue to head up. Now, we've already seen that it does that. We're cheating a little bit, but this is just going to show you how structure is valuable, right? So as price is heading back down, because we know it will, let's hit the play button, you're going to keep an eye on this area because you know there's some structure right there. You know price might bounce, and that might be your next entry point for the way up. So let's see here. Oh, there it is. Price hit it, and you have a nice little pop-up. So let's go ahead and go long, right? And let's see, looking left, where there might be some structure to tell us when to get out. We got it right here. This is that old spot back here that we used before, right there. So we're going to move our take profit to just below that. We got a stop loss here, and this is a 1.24. It's still better than a 1-to-1. And what does that mean? This 1.24 right there means that you can put in $100, meaning that if the price goes to stop out, price goes below the red line, you lose $100, but if it goes all the way up here, you make 125. So you still make more than you lose, right? So if you enter right there, and we kind of know the future here, but if we watch and hit the play button, we'll see the price goes up and into target, just like that. So now I want to go ahead and introduce the Easter egg. What I've shown you here with trend, identifying a trend, using structure, that's enough to trade. That's enough for a lot of people who trade. They trade just using those things, right? So let me just re-illustrate how that works. And then we're going to go to the Easter egg. I'm going to show you a little bit of a special tool we can use to identify when it might be a good time to enter one of these trades. First, we're going to look at a trend. Uptrend, higher high, higher low. And then what we do is we look for structure from prior moves in the past to tell us when we may want to get out of a trade. So we have price heading down, you know you're in an uptrend, price makes a bounce, and you want to enter your trade at that bounce, and you want to use some older price data. Perhaps you have an old pivot point back here where you want to get out by, and you use that old price data to get out. Price heads up there, you take your profit. Now in trading, you're going to lose every so often. I see people be profitable losing half their trades, and the reason they can do that is because they have, like this right here, a 1.7 risk to reward ratio. If this person loses, they lose $100, but if they win their trade, they make 170. Well, if you're losing half your trades, but you're making $170 when you win and $100 when you lose, then every other trade you're pulling in a total of $70. So out of 10 trades, you're making $350. That's losing half your trades, right? So you don't have to win them all. And in many cases, you don't even have to win half of them, right? It just depends on how you set things up. And that does get a little more into just a little bit more complex stuff. I mean, it's more of the business aspect of trading. It's treating your trading like a business. So let's take a look at our Easter egg. And that's a whole We're going to take a look at this and look for a trend reversal. Right now, price is, like we said, in an uptrend. Higher highs, higher lows, and it's going to do that until it doesn't. And eventually, it'll probably, well, almost guaranteed is going to make a downtrend. Nothing goes up forever. Good lesson to learn in trading. Nothing goes up forever. So price is headed up here, still in an uptrend. Now, how do we know we're in a downtrend? Well, first, we have to have the uptrend violated. So the uptrend looks like this. We got higher highs, higher lows. Now, if price were to make a move and break this low, it would no longer be in an uptrend. It broke that higher low and it has now made a lower low. It means the uptrend is violated. Now it might be in a downtrend, but it certainly means that the uptrend is violated. So let's go ahead and watch as price paints a picture for us, and we'll keep painting that trend as it goes, right? So we hit play, still in an uptrend, right? Still going to town, still making higher highs, higher lows. So we have what appears to be a new higher low, right? So the uptrend continues. Higher high, higher low. Now, if price goes below this low right here, that means that the uptrend is violated. Doesn't mean that it's in a downtrend. It just means that the uptrend is violated. So let's see what happens. Okay, price is heading down, and there it is. So now the uptrend is violated, and we might be in a downtrend. It appears that we are. We're going to know as soon as we see price make a lower high, right? So right now, what do we have? We have a violation of the uptrend, and now we're going to see if price makes a lower high and heads down. If price were to continue up, then it actually still may be in an uptrend. But if you can get a lower high on this and head down, that means we're in a downtrend. Okay, so how do we trade this? Let's take a look. First, let's identify that downtrend. Price is headed up, and it looks like we have our rejection, right? So we can trade this the same way we did before, right? We saw the rejection, and we would have identified it right about here using some candle theory and some other tools. Let's just say we had tools, right, to show that it's going to reject right here. One could go ahead and enter a short right there. Had those tools, given that identification, right? And so that would be our trade. Well, let's talk about one of those tools, right? Let's go ahead and give you the Easter egg here that we talked about earlier. We're going to use the stochastic RSI, okay? Where do we find that? What is it? Well, you go to your indicators here in TradingView and you type in stochastic RSI. You click on that, and when you do, you're going to get this down here, okay? And let me expand it so you can see it. This is your stochastic RSI. Now, I've made these lines a little brighter so you can see them, and the way a stochastic RSI works, it's a relative strength index. So if the moving averages, if this blue and orange line are above 50 here, which here's 50 right here, if it's above 50, then price is bullish. If it's below 50, then price is bearish. Okay. Now there's another bit here as far as how this works. If the stochastic RSI goes above 80, then it's in what's called overbought territory. And if the stochastic goes below 20, then it's in oversold territory. Now trading this, as a lot of kind of new people do, what they do is they want to sell when it hits overbought and they want to buy when it hits oversold. This is not advisable. Price can continue, even though it's in oversold territory, price can continue against you. And anybody who does that simple methodology with nothing else is probably going to lose their money. Well, we're going to teach you how to do that today while using market structure and trends in a way to make money. Okay, so let's jump into it. Now we have ourselves a trend and we have ourselves what could be a pivot down, right? Price is broken below what was supposed to be a higher low. Price broke below that, so you're now out of your uptrend, and it appears we have a pivot. Well, let's hit play and see what happens here. Now, if we're going strictly based on this indicator, I can't do anything yet, right? So I'm going to hit play again. The way we're going to trade this in this particular case is if price is in a downtrend and the stochastic RSI goes above 80, then I can enter a short trade as long as it goes back below 80. So let's go ahead and say that again. This is an example right here of where the stochastic RSI, the blue, went above 80 and then it came back down below 80. It broke and it came back down and it printed that way. So you got to wait for the candles to close, right? If that happens, I can enter a short if I'm in a short trend. Now, when this one happened, we didn't know for sure that price was in a downtrend, okay? So I couldn't use that data. So what I'm going to do now is I'm going to look for the stochastic RSI, at least the blue part of it, to pop above 80. And if it does, and price is still in a downtrend, I can enter a short. But what it has to do is it's got to exit back down. It has to pop above 80 and exit back down out of 80. And then I can enter on the move out of 80, right? So let's look for that here. Nothing yet. Didn't quite touch 80. We're going to hit play until it does. Okay, almost there. Oh, there it is. Okay, so what's happened here with the stochastic RSI is the blue peaked above 80. Now, the orange can do the same thing, but it's the blue we're looking at here. And that blue peaked above 80 right there, and now it peaked back down below, and the candle is now closed. So what I can do is I can enter my short right here because the candle's closed. That candle ended, the blue peaked up and went below, so I can go ahead and enter my short right here. I can put my stop loss. There's a way to calculate stop loss. We're not going to get into that today. I'm just going to put one there and pretend it's good. And we're going to look at our old structure here as to when I want to get out of this trade, right? We're going to get out before here. So maybe like right there. Well, let's see if this trade wins. I don't know if it's going to win. Maybe it won't. I haven't seen what this chart's going to do. So we're literally live testing this right now. So let's go. A little dangerous. Almost stopped out. Look at that. If you look here, you look up close, price actually climbed above and it almost stopped out. So a little dangerous. Let's see if it stops out. Nope. We got our exit. So now that price exited here, technically I could add a second trade on because it exited here and I entered this trade and the trade is still in play. Now, because it exited again, I can treat this as a separate trade. Now I got two trades on. So let's enter our trade. We'll have the same stop loss because we know that worked out pretty well. Now we're going to double up and let's see how well this works. Let's hit play. Still in the trade. Didn't break out yet. Barely in the trade, but still in the trade. That is miraculous. That is a very close to stop out, but it did not stop out. And as price heads down, we win our trade. Beautiful, beautiful, right? So that's a pretty, now mind you, the stop loss, I just kind of picked it out of thin air. So, you know, it might be that I had it a little deeper or not, but in this case, it didn't stop out. And that's always fun. So let's see if we can identify another win here. Let's see if we can do that. All right. So let me go ahead and get rid of this, get rid of this. We got two wins right there. Let's see if this goes up to 80 while still in a downtrend, because clearly price is in a downtrend right here. Lower highs, lower lows, right? So we know it's in a downtrend. So let's see if the stochastic RSI goes above 80 and we have another chance. There it is. Stochastic is above 80. Price is still in a downtrend, right? The way we know it is because it didn't violate this high up here. If price had violated this high right there, then we would be out of the trend. So clearly we're in still a downtrend. Now, we haven't had the stochastic flip back out yet, so we don't know if this trade is going to work. So let's see what happens. There it is, and the candle is closed, and we're flipped out of it. So I can enter as that candle closes right here, put my stop loss up here above the prior structure, and let's take a look at our older structure, and we're going to get out sometime before this structure right here. Now, this is a bit of a gamble. That's a pretty deep trade, but these are the rules, right? So we're going to just follow the rules because that's the psychological component to trading. You have rules rules, you follow them. Now, I usually have some other more advanced tools to pick my target, but in this particular methodology, we're just using structure and exiting before price hits that structure. So let's see what happens, right? Let's just hit play, let the chips fall where they may. Price heads down, nicely in a profit, still in that downtrend, still there. Looks like price might lose its downtrend here, right? But it's still in a downtrend. If you look, price is still in a downtrend. Higher highs, higher lows. We haven't seen price go above any of the prior lower highs, right? So you got lower highs, lower lows, still good to go here. Let's hit play. Price is nicely in a profit. So at this point, if I were trading this, I probably would consider taking some profit because this is a massive trade. This is a 4-to-1 trade, meaning that if I put $100 in, I'm going to take out $411. And I've seen price really dig deep into this. There's a good chance I'm going to take off at least half the profit here, take out about $100, and then leave in the other 200. That's if it goes to target 200. So let's hit play, see what happens. Oh man, almost made it, still in a downtrend, and we broke the downtrend. So I probably would have exited the rest of the trade as soon as the downtrend broke right here, right? So how do we know the downtrend broke? Well, this is a good rule for exiting the trade. So our downtrend, again, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and then you have price creep above here and it goes above that lower high, right? So the lower high that I'm looking at to exit the trade to say this downtrend is done is this right here. So we're going to use our arrow here. It's at that right there. Because price broke above that, I'm going to say, okay, chances are we're not in a downtrend anymore. Maybe we are, maybe I can leave it on, maybe it'll win, but I'm going to exit here because I've done very handsomely on this trade and I'm happy with that. So again, this is just a very basic way to trade, identifying a trend, looking for your stochastic RSI to go above here, and then entering as it exits that. And we watched as this happened, another trade occur, right? In fact, we saw 2 or 3 of them. We entered all the way back here, but then we had another trade right here because you could see the stochastic came above and popped down, right? And then we had another one right here because you could see the stochastic came above and popped down right here. Technically it did here, I would have lost that one. And then you have another trade here because the stochastic popped above and popped down right here. So I could have quadrupled up on this. I would have lost 1, but I would have won 3 or 4. And that's just the beauty of trading, right? So in the end, another way to look at this as far as this ending, as far as the trend ending, might have also been to say that this was the next lower high and that it was violated like right here. So there's a little bit of subjectivity in there, but in the end, the downtrends are pretty clear. And this is a very profitable little test. Again, I hadn't seen what price was going to do. I was in replay mode the whole time. So we won 1, 2, about 6 trades. We won doing this just in our little test. Understand they don't all win. And sometimes you'll have a losing streak. You might lose a few in a row. And that does happen in trading. And that's when your trading psychology stuff comes into play. So as a matter of fact, I'm going to put a link up in the corner here for trading psychology, and that's going to help you manage all of that. As of the time I'm recording this, which is March the 19th in 2025, we're seeing a massive pullback in global markets. I'm sure you've seen the news, stock markets falling. People are talking about tariffs being the reason, and there's a lot of theories around that. But if you take a look at Bitcoin, it's down in the middle of what is supposed to be a bull cycle. So if we take a look at the current price, it's at 85,000, down from 109,000. We have the stock market, that's falling pretty steadily. Massive losses across the board. And a lot of people thought, oh, but Trump's going to be in power and we're going to have all these great stock market gains and everything. And while that might happen in the future, what we've seen is a lot of people who were making easy money on crypto and easy money on their meme coins and easy money in the stock market. And just when they thought they were doing great, the world changed and you have a massive dump in the stock market, as you see right here. Now, what we do at Algo Factory is we turn that uncertainty and that volatility into your ally, into an opportunity for you. We have so much value, insane amounts of value. For $100 a month, go down to the description and click on the link, and what you're going to get, it's basically a 2-part deal. You're going to have the Algo Factory University, which I have personally created, and it's a lot of homegrown education that's going to teach you how to build your own trading method. And this is really important. This is what is really, really important about this game. When you trade, you have to have confidence in your trading method. You have to understand that these are probably the results I'm going to get. And we teach you how to estimate that. We teach you how to back test it and forward test it. And that way, if you ever have a losing streak of maybe 4 trades in a row, you don't just give up and throw several months of work down the toilet, a perfectly good trading algorithm into the trash. And that's just one dimension of what we do. The other half, besides the university and the education and all that, is the Telegram room. And that has a lot of people in there around the world, including V and myself 24/7. You can ask us questions. Hey, what do you think Bitcoin's going to do? What do you think the stock market's going to do? Whatever that is. And we can show you what we think is going to happen. We also will share some of our trades. I will personally share a number of my trades as I get into them, and my trades are pretty good. You know, I win more than I lose by far. As a matter of fact, in the last 2 or 3 days, I've shared 2 or 3 trades that have been bangers. Last week, I had a 4-to-1 risk to reward trade, which is a big deal. It's like putting in $100 to pull out $400. That's the other part of what we offer. And V the Gorilla comes in 4 days a week at 8:30 AM EST. You probably have already seen us come on YouTube. We go on there for about 10 minutes to talk about what's happening in the market. For the following 50 minutes, the rest of that hour, it's the private live lab on Telegram. And what we're doing is we're talking about what we're hearing is happening, what we see in the charts. Now, many of you might know V the Gorilla already and the kind of reach he has, the people he talks to. He deals with people who are adjacent to cabinet ministers. V's a monster. People don't have any idea how big he is on the scene. And he does massive gold and crypto deals. This guy knows what's going on. And with Algo Factory, he shares the inside word with us. And of course, no insider trading or anything like that, just he knows what's going to happen before it happens, and he's pretty accurate. He's the most accurate person I've seen with this kind of information going back a long time. So we have people who have a subscription to Algo Factory just so they can get his live information. They're not even doing the university, but for them, the amount they pay is worth knowing what he brings to the table. It's like having a Patreon channel essentially, but we also teach you how to trade. So again, it's $99.98 a month. You get to learn how to trade your own algo. We're going to teach you how to build it. I give you 2 included one-on-one sessions for an hour, right? So every person has 2 included one-on-one sessions where I coach you through building your algo after you've met certain milestones. On top of that, if you want to go through a coaching session live in front of our audience, then we don't count that towards your ones that you don't have to pay for, right? So one-on-one with me as a client is $200 an hour, and one-on-one with me as a non-client is $400 an hour, but we won't charge you anything if you do the one-on-one for everybody to see. So essentially you get infinite one-on-ones as long as you're building your algo. And I'm usually able to help people correct whatever problems they have and squeeze out a lot more profitability. The value that we offer is absolutely insane. Come check us out, algofactory.tech. There's a link below. So I hope to see you in the emails. I hope to see you on the live shows. Again, we're Tuesday through Friday on YouTube, Rumble, and X, and that's at 8:30 AM EST. And again, thank you for watching. Come see us at algofactory.tech. Check the links below. Have a good one.